The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very good morning to you and warm welcome to Squawk Box Europe. I'm Juliana Tattlebaum here with Carolyn Roth from Zurich. These are your headlines this morning. China's economy hits the brakes in August with factory output growth at its weakest in a year and retail sales at a 9-month low.
Fitch downgrades France's credit rating to A+ from AA-, citing a rising debt ratio and political instability days after the downfall of yet another prime minister. The UK touts investment from big bangs and announces a nuclear power accord with the US ahead of President Trump's state visit, but pharma firms raining on the parade, canceling planned projects.
Well, happy Monday, everybody. Happy Monday. Carolyn, it's great to see you in Zurich. I hope you had a drier weekend than we had here in London. Quite a week ahead. We've got the Federal Reserve meeting this week where the market is widely expecting a 25 basis point rate cut, but we could get dissent in both directions, which would actually be the first time that we had a three-way split since 2019. So huge focus on the Fed this week. From a geopolitical perspective, we've also got U.S.-China trade talks in focus taking place in Madrid. We already had things kick off over the weekend. Interestingly, TikTok featured pretty prominently in the opening gambit. And then, Carolyn, here in the UK, a lot of focus on President Trump's state visit coming up later this week.
Yeah, what a pivotal week for the markets. And thank you very much. We had a lovely sunny weekend over here in Switzerland. But what a week for the markets, given that we are going to be getting that 25 basis point cut by the Fed. That is fully priced into the markets. But I think what's more interesting is obviously the S&P, the dot plots, and what's going to happen further out next year. The market currently pricing in a handful of cuts deep into 2026. Is the market actually going to get that? And it kind of is a bit of a deja vu from 2 years ago when the market got ahead of itself in terms of pricing and all these cuts. We didn't get the cuts. So I think one of the key questions this week is to what extent the Fed is going to be pushing back on that this week and what the market reaction will be looking like. And then, of course, we've got France.
We certainly do, Carolyn. We'll be talking a lot more about the downgrade from Fitch with Charlotte a little bit later in the program. But let's get straight to the latest out of those U.S.-China trade talks. The officials for both sides are set to begin a second day of negotiations in Madrid today, with the two sides discussing trade and tariffs, as well as this week's deadline for TikTok owner ByteDance to divest its U.S. operations. Amid expectations, it could be extended for a fourth time. Meanwhile, a series of key Chinese economic indicators missed expectations in August, with retail sales, industrial output, and fixed asset investment all disappointing amid continued concerns over the health of the world's second largest economy. Well, to discuss more about what's happening in China, Friedrich Naumann joins us now, Chief Asia Economist at HSBC. Friedrich, great to have you with us this morning.
Good morning.
I'd be very keen to kick off with your take on the Chinese data, the activity data that we got overnight. What's your sense of how things are looking on the ground in China?
It's challenging, right? We had a pretty good first half of the year, and suddenly in July, things are starting to look weaker. And then there was a thinking, well, is this just a fluke? It's just 1 month data. But now we have the evidence. No, it's actually second month in a row where we see that renewed slowdown come through. And that will certainly be a bit of a wake-up call, I think, to Beijing. And the markets are up now because they're saying, look, there could be more stimulus because it really shows the economy isn't fully on the mend yet. And so that's where the hope is right now.
How much of the weakness is a result of tariffs versus other factors, domestic factors?
See, that's exactly the worry. It's not so much the tariffs that are really dragging the economy into a lower trajectory. It's domestic demand. And in particular, the housing market. There were some signs of a bit of a green shoots in the housing market earlier this year. Suddenly we get the news, well, house prices are weakening again, home sales are weakening again, and that dominates everything in China. And so the housing market isn't fully on the mend yet. That's a challenge.
And you mentioned how markets have continued to go from strength to strength because investors are reading this as a sign that more stimulus is coming. What's your expectation, your assumption around what we could see in terms of stimulus from here?
Well, more fiscal spending, of course. That's very likely to come in the next few months. We've seen already stronger disbursements this year. Fiscal spending is up about 9%, but it's not enough yet. You need to do more, right? So there might be more in terms of new bond issuance, for example, but also a rate cut is back on the table, particularly the Fed's cutting rates. We're going to see the PBOC cut rates as well.
Frederick, this is Carolyn in Zurich. Is that going to be enough, though, to take the economic growth level to 5%? Because it feels like with this slowdown, the 5% seems to be uber ambitious.
Well, the first half of the year was already above 5%. So the second half of the year, we could come in slightly below that and you'd still kind of hit that target. But I think you're right to ask, is that enough in terms of momentum, particularly going into next year? Because if we next year want to hit 5% again, you almost need to start work in the fourth quarter this year, getting the economy to reaccelerate. And that's going to be something that's being discussed certainly now in Beijing. And that's why by October, November, we would expect more fiscal stimulus come back in. Not in terms of a huge boom in China, but just stabilization of demand. That's going to be the critical task at the moment.
Mm-hmm. And then there have been other measures that have been announced, and I'm wondering how effective these really are, like the anti-involution drive or the drive to crack down on competition. And obviously, I would assume that these measures do take time. Do we need to be a little more patient here?
Well, they do take time. I think you're right about this. But also the paradox is that in the short term, they can actually hinder growth rather than help growth. Now, the idea with anti-involution is to stop that really disruptive price competition that's bringing down inflation. However, in order to achieve that, you also need investment discipline. You need to reduce the buildup of excess capacity, and that means less investment. So the anti-involution policy is probably the right thing over time, but in the very near term, that might actually mean weaker manufacturing investment. That's going to be a drag on growth. So again, focus is on fiscal stimulus, particularly anything that's aimed at consumption in the property market.
Frederick, I want to take it back to the consumer who is so central to the entire China story. Recently, we saw the deflation figures, particularly for the durables component, and that deepened last month to a level more severe than the great financial crisis, which really struck me. And I do wonder to what extent the cash for clunkers initiatives, do they really help to kind of pull the consumer out of this deep rut that he or she is in?
It's not enough. Yes, you can kind of accelerate consumer goods purchases a little bit, but remember, you're really bringing forward future consumption into the present, and that kind of raises the question, well, what comes in the next few months once these programs run out? So that's one big challenge. The other one is we have enormous excess capacity at the moment in China, weak domestic consumption, but exports are about to roll over as well. At least that seems very, very likely. So there's yet a bigger drag to come on the external side, and that might intensify some of that excess capacity issue. So that will raise really the sense of urgency in Beijing to get demand going again and to try to put a floor under prices, as you rightly say.
Speaking of a sense of urgency, Frederick, how urgently does Xi Jinping want to get a deal done with President Trump, given, as you've just explained, so articulately, a lot of the problems that China is facing are homegrown. Yes, we are seeing the prospect of exports rolling over as a result of what's happening on the trade front, but a lot of these issues are China-specific domestic issues.
They're very domestically focused, right? And 97.5% of the economy is non-U.S. exports, right? So it's all about domestic side. In terms of the urgency with the U.S., I would actually argue that there is at the moment kind of a stalemate, if you will. Things are kind of evening out. We have a certain tariff level, 40, 50%, but both sides don't seem to be key to rattle this. So we might actually see the deadline extended again. We know at November 10th there's a big deadline for a deal. come November 5, 6, 7, 8, 9, I think we're going to get another 3 months because it's in no party's interest to really rock the boat and to press a deal. And also we have potentially a meeting between the two presidents, and that might come through in October. Maybe there's a bit of a breakthrough here, but I don't think there's a sense of urgency to get a deal done very, very quickly.
What could ultimately break the stalemate, or do you just see this bubbling along for months to come, with the status quo remaining in place?
For now, I think it suits both sides. From the Chinese side, certainly it means that we have a certain level of tariffs. The very higher ones that we talked about earlier this year, the 150%, that doesn't seem to be on the cards right now. So we can live with what we have right now. On the U.S. side, also pressing for a deal might complicate relations around rare earths, for example, might complicate issues in terms of Chinese purchasing, putting big American purchase orders in. So just kick the can down the road seems almost the easiest option from both sides right now.
It's interesting, as they sort of kick the can down the road, we have seen China strengthen ties with other nations, India, Russia, for example. It's some of the most interesting headlines that came out of the summit a couple of weeks ago, the fact that Russia and China looking to build a pipeline directly to Siberia here. How far do you think that relationship could actually go between China and Russia, given we know China doesn't want to become overly reliant on any one country?
Well, it's already been a closer relationship in recent years. For example, Chinese car exports to Russia has been very strong. That helped the Chinese car industry. Of course, China is buying energy from Russia that helps Russia. So there are some mutual beneficial aspects to the relationship. Now, the pipeline you just mentioned, that's going to be years in the making. It's not yet even clear that everything around this is done and dusted. The pricing, when it will be built, how it's going to be financed. A lot of that still needs to be sorted out. So we're talking 5 to 10 years before that really becomes a major driver for the energy landscape.
We know China, in contrast to many Western governments, thinks extremely long term. They think in decades, not in quarters. What would you say is Xi's number one priority here? And what's the biggest risk in his mind? We've heard in the past, the biggest risk that he's trying to control for was social unrest. And when you think about that, it's easier to understand or predict his policy moves. Where do you think things stand right now?
So it probably shifted a little bit over the years. So remember 10, 20 years ago, it was all about per capita income, getting as rich as quickly as we can, and they delivered on that score tremendously. Now it shifted a bit more towards resilience, that is, hardening the system against potential sanctions, potential tariffs from the rest of the world, making it technologically independent, helping essentially the country to become less vulnerable from a geopolitical sense. So that's shifted slightly in that direction, and that might also explain why the speed of the stimulus measures is not as quickly as some investors would like, because Beijing is focusing also on long-term sustainability, making sure there's no debt bubbles, making sure they're technologically independent.
Frederick, thank you so much for the conversation this morning. Frederick Newman, Chief Asia Economist at HSBC.
All right, still coming up on the show, France's new prime minister faces a fresh challenge after Fitch slaps the country with a downgrade. Plus, several tech CEOs are reportedly set to join Trump on his trip to the UK later this week. We'll look ahead to the state visit and what it could mean for the tech sector. And we'll discuss the outlook for cable with Nomura's Dominic Bunning as the firm opens a tactical short sterling trade. That conversation is coming up at 9 London time. We'll be back in 2. Welcome back to the show. Fitch has downgraded France's credit rating to A+ from AA-, citing an increased fragmentation and polarization of domestic politics. It comes just after President Macron named Sébastien Lecornu as prime minister following weeks of political turmoil over the country's budget. Now, Lecornu has already made changes to his predecessor's proposals, dropping the plan to cut 2 public holidays. Lecornu also signaled he would revisit discussions around a proposed wealth tax. Quick check of how forex markets are trading this morning on the back of this Fitch downgrade. Euro dollar changing hands at 117.25, only down modestly on the day. I assume that a large part of this, of course, had already been priced in. Let's get out to Charlotte, who's got more on this story. It may not have been a surprise to the market, but was it a surprise to France's new elite?
Yes, potentially. And look, just 2 days into the job for the new Prime Minister, this new warning shot there for Sébastien Lecornu, just 5 days after his predecessor was ousted in a no confidence vote. And again, we're just 7 notches above junk there by Fitch. And of course, Fitch is seen as a first mover when it comes to ratings agency. And we know that S&P and Moody's have their own ratings review in October and in November. So certainly a warning shot there. Fitch mentioning the political fragmentation and polarization. And they said this weakens the political system capacity to deliver substantial fiscal consolidation. Of course, this is at the heart of the issue there. Interestingly, they mentioned that they see the debt for France actually rising in 2027 to 121% from 113 in 2024. And of course, they talk about the instability and they see this continuing to the run up to the presidential election in 2027 with a high likelihood, and I quote Fitch here again, that the political deadlock continues beyond the election. So that would be the rationale behind this downgrade, even though, issues and a government falling around the budget was very much expected. Of course, both Bayrou and Barnier, the two predecessors of Lecornu, were ousted as prime ministers around the question of the budget, tried to tackle the deficit that was at 5.6% last year. So they tried to bring this down. But of course, because of the minority government, it is difficult to get on board other parties with potentially making necessary cuts. Now, in terms of reaction, of course, we had Francois Bayrou, the prime minister, just before Lecornu, saying that a country whose elites, and he's talking the members of parliament here, lead it to reject the truth is condemned to pay the price. So really dumb warning there from Francois Bayrou. So now what's next for Sébastien Lecornu after this warning shot there? He continues his consultation with different political parties to try and find where there is a bit of room for compromise and maneuver to try and draw the new budget. Of course, as you were saying in the introduction, he announced that he will be, he's giving up on the idea of scrapping 2 public holidays. You could think that was probably politically not very savvy to go ahead with this idea. But he says the country is paying for the instability and that he's ready to look at new ideas. There will be more warning shots for him September the 18th. So later this week, you have a national strike after the protest that we saw already last week. And farmers also now calling for a day of action on September 25th. So multiple warning, multiple key chapters there for the new prime minister in, again, a very fragmented political environment.
And Charlotte, this may not be the end of it in terms of the rating agencies. There are a few more out in the month of September, October, November, out with their reviews on the French economy. What should we expect here?
Well, again, Fitch is often seen as the first mover. That's why this move, that was a little bit unexpected, is seen as so important because here again, S&P is having their own ratings review in October, Moody's in November, and S&P already made some warning just a few days ago. So they didn't change their rating, but again, they did highlight that the political fragmentation is problematic. And they also see the instability continuing until the presidential election of 2027. So here again, the fact that Fitch has decided to move already could signal that other rating agencies might decide to move as well. So as you were saying, and like a lot of guests I spoke to on the ground in France last week, a lot of the risk has been priced in, but this move certainly was seen as a surprise. So we have to wait and see. You have Citi, for example, last week saying that they see a parity between French oats and Italian BTPs to happen by the end of this year. So certainly maybe we might see a bit more moves, further moves going forward.
Rather extraordinarily, borrowing costs for a number of French companies I saw have fallen below those of their government. What does that say about how investors feel about investing in France right now?
Yeah, so that was this interesting research from Goldman Sachs talking about the yields on bonds of groups like they mentioned L'Oréal, Airbus and AXA have sunk below those of French government debt. And so, of course, these very international French companies are seen as a lower risk than the French debt themselves. And it's seen as an unusual move. They see the banks are being slightly different because we know the connection between the sovereign and the national banks. But they see this as a very interesting kind of move happening there going forwards. But again, for the French rating, some say why does it matter when it comes to companies? But it matters because, of course, we know the repayment of the debt. It can mean the change of rating can mean that there's automatic sale by some investors. And of course, domestically, politically, it matters because it's one more tool that, I guess, opposition parties point the finger to the government and say, look, they are unable to manage the economy. We need to move on. Even though most of these opposition parties don't want to make any cuts. If anything, they want to make less cuts. So it's kind of ironic there. But certainly it does matter because in terms of the conversation around this, it really raises the question of things need to be done very quick, but everybody disagree on what and how it needs to be done.
Charlotte, thank you for bringing us the latest and breaking it down. From one political challenge to another, a growing number of labor lawmakers and trade unions are reportedly putting pressure on Keir Starmer, saying he needs to turn things around before local elections next May. That's according to the Financial Times. This after the government's Phase 2 relaunch was overshadowed by scandals leading to the resignation of the Deputy Prime Minister, Angela Rayner, and the sacking of U.S. Ambassador Peter Mandelson days before Trump's state visit. Elon Musk made his starkest intervention yet into British politics over the weekend, delivering a speech calling for revolutionary government change to a protest organized by far-right activist Tommy Robinson in London. More than 100,000 people joined the protest, which drew criticism after dozens of police officers were injured in violent clashes. In his speech, Musk told protesters, violence is coming to you. You either fight back or you die. Pretty strong words coming from Elon Musk. If you were in the city over the weekend, you no doubt saw these protesters active on Saturday. Meantime, over in Germany, a far-right Alternative for Germany party has almost tripled its support in local elections in North Rhine-Westphalia, the country's most populous state and a key center for industry. According to projections from state broadcaster WDR, the party has moved into third place, ahead of the Greens, but still trailing the ruling centrist CDU and SPD parties. President Trump has threatened to declare a national emergency and potentially federalize the governance of Washington, D.C. This after the city's mayor said police would not continue cooperation with immigration enforcement authorities once the 30-day period of federal control ends. In a post on Truth Social, Trump said the mayor's decision would lead to crime roaring back. The suspect arrested and accused of killing conservative U.S. activist Charlie Kirk has been identified as 22-year-old Tyler Robinson, Utah's governor has said, with state charges set to be filed against him tomorrow. NBC's Morgan Chesky filed this report.
Tonight, new insight into murder suspect Tyler Robinson. Authorities telling NBC News the 22-year-old is now on a special watch status and under close supervision inside Utah County Jail.
The suspect has not been cooperating so far.
On Meet the Press, Utah's governor said Robinson's former roommate is helping investigators, adding the two were in a romantic relationship.
We can confirm that that roommate is a boyfriend who is transitioning from male to female. I will say that that person has been very cooperative with authorities.
The governor adding the roommate had no idea Robinson was planning an attack on conservative activist Charlie Kirk. A federal official tells NBC News there's not a solid understanding of whether there's any connection between that relationship and the shooting. Kirk open on his views critical of both transgender people and trans rights. Investigators say the suspect told his family he didn't like Kirk or his viewpoints.
According to family and people that we're interviewing, he does come from a conservative family, but his ideology was very different than his family.
State charges are expected to be filed against the suspect on Tuesday. In Arizona, Turning Point USA, the conservative organization Kirk co-founded, is now planning a massive memorial. The event next Sunday at Arizona's State Farm Stadium, expecting to draw President Trump.
I'm going to be going to Charlie's, I guess you'd call it a funeral. There's the small one. I said, can we do the big one? Because we're going to give him the Presidential Medal of Freedom, which is a big deal.
More tributes appearing nationwide. On NFL Sunday, several teams honoring Kirk before kickoff.
All the darkness.
And in Phoenix,
we pray that Charlie Kirk's life will be celebrated today.
Kirk's church remembering his impact, calling his life a testament to unwavering conviction, and even sharing an AI-generated message of Kirk himself from beyond the grave.
Don't waste 1 second mourning me. I knew the risks of standing up in this cultural moment, and I'd do it all over again.
Back in Utah,
there's a lot of pain. There's a lot of pain. not just me, but in the whole world.
On the campus where he witnessed the shooting from mere feet away, Skylar Baird is refusing to live in fear, standing by what he believes in.
You feel, in a way, emboldened.
Oh, 100%. 100%, 1,000%. We're here to challenge our ideas and to learn from one another so that we can find truth. And I believe that truth, obviously, to be with God.